Hi there, welcome to Kneppy Invest and welcome to another technical updated video. It is the 20th of October 2024. Current time in Brisbane, Australia is 8:47 a.m. In fact, I could have started recording this video at about 7 a.m. I've been up since about 4:30. That is a typical time I get up this time of year. I like getting up early. In fact, I'll be completely honest with you. I know some people love sleeping. I hate sleep. If I didn't need to sleep, I wouldn't sleep at all. And that's the only reason I sleep is because it's a necessity and I just have to sleep. So I pretend no sleep at all if I had my choice because there's so many things to do. I just am busy non-stop doing things. Anyway, this video is not about my personal life. This video is about charts, particularly when it comes to indices, commodities, bonds, cryptos, and also individual companies' charts, particularly on the ASX. And this video is no different. In fact, when we get to the individual company portion of the video, I'll be looking at 15 individual companies' charts that look interesting for various reasons. Another thing I'm going to do today after this video is I'll do a standalone video on banks on the ASX. And the reason I'm doing this standalone video is because of two comments or questions that were released in my videos within the last month, and I thought I'll address these questions. And what I'm going to do is I'm going to try to leave my bias out of answering these questions or commenting on these comments. So I'll release that on Monday morning sometime. Also do a standalone video on a company called BSA, and I'll record that video sometimes during the week when I have a bit of time. Maybe on Tuesday or Wednesday to be released the following morning. So more than likely that will be released in the morning. So look out for that video on the banks on Monday morning if you are watching this video on Sunday evening. But if you're watching this video after Monday morning, look out for that video right now because there are some interesting things I'm going to talk about when it comes to the banks. Anyway, let's get to the crux of this video, looking at some charts, first focusing on indices, ASX indices, as I always do. Now, an interesting week for the markets, not only in Australia, but also overseas. And when I say interesting, I probably say that for every single week. But the main thing about the XGO right now, if we look at the daily chart, is it has been above the top of the trading range for about 4 or 5 trading days, which is a significant move from the XJO because it has been trading in this range for 15 years. The only time it has gone below or above this range for an extended period of time was during the COVID-19 financial panic, so a black swan event. Now, if the SJO remains above the top of the trading range, that could be a significant, important move. Now, otherwise, if you just look at this chart without knowing there was any sort of trading range here, you'd be fairly bullish. In fact, the SJO has been an uptrend since the start of 2024, and it keeps getting to all-time highs. In fact, it got to an all-time high on the Thursday session, a little bit of weakness on Friday. I'm not sure what caused that weakness. In fact, I'm going to say it was just a bit of a hissy fit from the ASX, from the Australian investors. I'm not sure if they thought the Wall Street was going to have a bad day. In fact, Wall Street had an okay day. NASDAQ was up 0.66%. Dow Jones was up a little bit. Russell 2000 down a little bit. But I think the Australian investors thought for some reason the American indices were going to have a bad day. So I fully expect a really good day on Monday to sort of counteract the bad day on Friday. So, and the reason I say that, the other reason I say that is the Australian futures were up pretty good the last time I looked. Anyway, so I am a little bit bullish when it comes to the XJO and Australian markets right now, just based on what I see. The only reason I might not be bullish for the XGO is simply because it is above the top of the trading range. And when it has been above the top of the trading range in the past, we have seen weakness. And so we might see weakness moving forward. And one of the ways we might see a little bit of weakness is if we see a lot of selling when it comes to financials and the banks. I definitely can see that happening, but will it happen? Don't know just yet. Okay, so XGO looks pretty good. In fact, it was a pretty good week. I think it was up 0.8%. Yeah, 0.84%. So, in fact, when you look at the weekly chart, daily chart for the XGO, nothing to complain about at all at this point in time. The only thing I should mention is the bottom of the trading range right now is approximately 6,700. and so the SJO is 8,200. So even if we had a pretty significant fall, say 10% fall, we need a little bit more to get towards the bottom of the range. So we are talking about 20% fall before we see the XJO at the bottom of that trading range, and that could happen. We could go through a significant correction, and that definitely could happen because corrections happen every so often on the equity markets. Okay, so let's turn attention to the XSO. One of my favorite indices is the XSO simply because I do like small caps. Now, I do prefer profitable small caps, and the small ordinaries consist of lots and lots of non-profitable small caps, lots and lots of mining companies that are not going anywhere. Now, the good thing about the small caps, or the XSO, is it's starting to look way more bullish than it has in the past. In fact, I would actually say the XSO is looking the most bullish it has since 2021. So this is the weekly chart. It also got to a 2.5-year high during the week. Now, if you do have a look at the weekly candlestick, there is a bit of weakness there. I don't like seeing these candlesticks where you do see a long shadow above the main body. So if you look at last week's candlestick, it was up 2.5%, and the XSO actually finished near the high of the week. Not true for last week. And the main reason behind that is because of the bad Friday session. If we go back to the daily chart, the XSO was down 1.28%, a little bit more than the XJO. The other thing I noticed when I'm looking at the XSO is a lot of volatility during the week. So up significantly on Tuesday, down on Wednesday, up significantly on Thursday, and then down on Friday. But the good thing is, or the interesting thing is, the good days, I was going to say the good days were better than the bad days, but that's obvious. The percentage change on the good days, absolute value percentage change, was higher than the absolute percentage change on the bad days. Hence, overall, during the week, it was up. But again, there was a bit of selling at the end of the week. That's because of the bad Friday session. I fully expect the small caps to be up on Monday. However, the Russell 2000 was down, which I'll get to in a second. Now, looking at the daily chart for the small caps, there was a bit of a breakout about a month ago, and it's still looking pretty good. I do like this chart. In fact, I might prefer this chart over the XJO. Okay, so that's the ASX indices. Now let's turn attention to the American ones, the Wall Street, NASDAQ, Dow Jones, and Russell 2000. Let's start off with the NASDAQ. Nothing much to say here. It's getting towards the all-time highs. NASDAQ saw back in July. It's getting very close. Maybe you could say there was a little bit of weakness the higher the NASDAQ did go through the week. In fact, there was 2 big Dow days during the week, down 1.37% on Tuesday, and down a further that's up. Oh, it was down during the day. So it opened up fairly significantly on open, but then fell during the day. So overall, during the week, NASDAQ was flat, up slightly, 0.26%. So fair bit of indecision, you could say, in the market right now when it comes to the NASDAQ. And one of the reasons behind that is because maybe it's near the highs the NASDAQ saw back in July. Another way to look at this is there's not much conviction with the sellers or with the buyers right now. There's another way to look at these doji candlesticks. There's not much conviction on either side. So which way is it going to move next week? I don't know. It could go higher, it could go lower. That's the whole thing about dojis. It's just showing you there's indecision, or there's a fight between the bears and the bulls, and they're really even right now. Neither side is winning. That's the way to look at doji candlesticks. And moving forward, you just don't know which way it's going to move. Who knows who is going to win in the end? Sort of like a fight between me and if I had a twin brother, identical twin brother, and we had the exact same life. Who's going to win? Just don't know. By the way, I do not have an identical twin brother. Okay, so that's the NASDAQ's looking okay, near the highs we saw, but not as bullish as the Dow Jones Industrial. This is by far the best looking chart for all the indices, maybe except the DAX. I don't know. Maybe except the Hang Seng. Hang Seng, no. I like the Dow Jones by far. This is the weekly chart. And for 6 consecutive weeks, the Dow Jones Industrial has been up. So 6 pretty good weeks in a row. And it's in an uptrend, no complaints at all. And if we turn attention to the daily chart, one bad day during the week, and that was on the Tuesday, but otherwise the daily chart looks pretty good and it keeps getting to all-time highs. So no complaints when it comes to Dow Jones. In fact, it's been looking pretty good. A little bit of weakness back in October, November last year. And before that, a bit of, it wasn't doing much before that, but it really broke out back in November of last year. So about 11 months ago. And it's been looking absolutely brilliant ever since then. And finally, to the Russell 2000. This is a small cap American index. And this is actually interesting because I put this purple box in the Russell 2000 showing a bit of resistance or a bit of supply, I suppose. This is sort of the zone where you might see a little bit of more selling and maybe a little bit less buying. And the Russell 2000 has had problems getting above this zone. During the week, it did get above the zone slightly. On the Wednesday session, it just reached above the top of the zone and then fell back the next 2 days. And by the end of trading on Friday, it was just in that purple box at the top. So a very important week moving forward for Russell 2000. If it can get above the top of the box, that will be a very bullish move, and I think it will. I'm predicting right now it will. And in fact, the Russell 2000 looks pretty good. Small caps are looking good. In fact, it's been looking good since the start of 2024. In fact, this chart is looking fairly similar to the XJO. But let's compare. Russell 2000, XJO. They both moved into an uptrend at the start of 2024. That's probably the end of the correlation between the two indices. They look similar, or the charts look similar. Other than that, I don't think there's much similarities between the two. Okay, so that's the American indices. Dow Jones, I think, is the best looking one. That's my favorite chart out of all of these indices I've so far looked at. But no reason to be bearish looking at those 5 indices. Now onto the international ones. I'm going to spend a little more time when it comes to Japan. I actually listened to a podcast. I have not spent any time on Japan whatsoever. But this particular podcast, the expert actually said something really interesting. He said a lot of companies in Japan are now trading below the enterprise value because they have no debt. The Japan have gone away from debt because of what happened in the late 1980s. They leveraged way too highly or muchly. And they've really gone through a deleveraging phase, and now what they're trying to do, not sure who's doing this, but what they're trying to do is get corporations in Japan to get more leverage, get more debt, because return on equity has gone way down, and some of these companies are trading below, maybe not book value, but definitely below enterprise value, which means some of these companies are cheap. So I should have a look at some of these Japanese companies because I could buy them through my super. Anyway, the Nikkei looks okay. Yeah, it looks okay at this point in time. It's definitely not bearish. I'm not quite bullish either. In fact, you could say if you take away that big dip during the yen carry trade, whatever you want to call it, if you take away that, the Nikkei has been going sideways for about 6 months. So neither bullish nor bearish when it comes to Nikkei right now. Hang Seng maybe a little bit different. It's had a really nice bounce on Friday. So there was a pullback, and it's bounced off the shorter term moving average channel. That could be a good sign moving forward for the Hang Seng or the Chinese market. I just don't know when it comes to China. It seems like the Hang Seng and sentiment in China is absolutely perfectly correlated to the government, any sort of stimulus. And I don't think that's the right way to move forward when it comes to investing, because then you're relying on the government and decisions made by the government. So that's Hang Seng. At least it's not in a downtrend anymore. Now onto the DAX. And if I had to guess, an indice that might look better than the Dow Jones Industrial, it might be the DAX. But that's without me looking at the DAX. So let's have a look at the DAX. Is this better than the Dow Jones Industrial? I think it's close. It's close. Let's just compare them. Dow Jones Industrial, DAX. There's not much different. I would probably put these two equal. Dow Jones and DAX are the best looking indices out of the ones I'm looking at. So maybe there's another indice out there, maybe the Omanish indice, or definitely not the Yemenish stock market. Maybe the Botswanian stock market looks better, or their chart looks better than this. Their indices, whatever. They probably don't have a stock market. Anyway, so DAX and Dow Jones, probably my favorite charts out of all the indices. Now, I might be getting a little bit early saying that because I haven't looked at the FTSE. But I'm pretty sure the FTSE doesn't look any good. It's just going sideways. And that's been confirmed. Still going sideways. There was 2 pretty good days on Wednesday and Thursday, but then a negative day on Friday, and it's still going sideways. So no movement in the FTSE at all. It's been going sideways for about 5 months. Okay, so that's the indices. Now let's turn our attention to commodities. And the first 2 we're going to look at are gold and silver. And I can almost guarantee you these are going to look pretty good. In fact, silver's up 4.6% in the last trading day. Gold. Do I have to say anything here? Look at it. Gold. That's a daily chart. Weekly chart's going to look good. In fact, gold had a really good week. Up 2.4% after 2 consecutive weeks where it went sideways. A nice consolidation 2-week period. In fact, if we look at the daily chart, maybe you can see that. You can't see it as well as the weekly chart, but you can definitely see it in the weekly chart. In fact, it reminds me of back in August. There was a really good week, on 12th of August, and then it went sideways for 3 weeks, and then 3 really good weeks, then another sideways period for only 2 weeks, then another really good week. This is a brilliant chart. In fact, I had a look at the companies or stocks on the ASX that are at 6-month highs. It's just full of gold companies. Gold stock after gold stock after gold stock. So if you're heavily invested in gold and have been heavily invested in gold for quite a while, you have done really well, particularly since April. Silver. Oh, by the way, before we have go any further, let's have a look at the 6-month high. So this is a 6-month high. So these are companies whose share price are at a 6-month high. 85 matches out of over 2,000 companies. First on the list, and this is ranked by or listed by market cap. So first on the rank, we have Northern Star. Then we have Evolution Mining, Bank of Queensland, which released results and share price took off. Then Perseus, Westgold Resources, Ramelius, Genesis Minerals, Judo Capital, another bank company, Insignia Financial, Regis Resources, Redox, which is a company I own, by the way, trading, Resolute Mining, Spartan Resources, Orabanda Mining, Index, Healy Group, Perenti, Pantoro, another gold company, Catalyst Metals is there as well, Southern Cross Gold. It's just full of gold companies. St. Barbara is there as well. That just shows you that gold is the place or the sector to be right now. Okay. Another sector to be, or an area to be, is silver. A really good day on Friday. Looks like up. Oh, that's the weekly chart. Let's have a look at the daily chart. Up. What's that? 4.6%. And a possible breakout. It's been waiting that for a while. So we wanted to see it getting above this dash line. It struggled in the past. You can see it struggled back in May of this year. And it also struggled in September. You can see it going sideways, trying to get above that line for a while. And then it pulled back on the 8th of October. So maybe that was a sign to get out, but you were being tricked because it rallied hard on Friday. And sometimes to get a breakout like this, you need to see it rally hard. A lot of times when you're talking about individual companies, you want to see really big volume coming through because the market knows, either subconsciously or consciously, that you need a lot of strength for something to break out. And silver has broken out. I am saying that right now. Now, preferably, I'd like a bit of confirmation. I'd like a confirmation. So in the next few days, I'd like to see silver remain above that breakout level. But this looks fairly bullish for silver. And that's probably one of the reasons why I've included one silver company in my list. Andean Silver, for that viewer who loves that company. Always asking about Andean Silver. Andean Silver looks good. Adriatic Metal looks good. That's the only 2 silver companies I can think of right now. There's another one, Australian Silver Mines or something, but not many silver companies on the ASX. Anyway, silver looks pretty good. Let's go back up to iron ore. Well, iron ore doesn't look as good. We had a nice little rally on the Chinese stimulus, and it's starting to roll over. In fact, maybe a bad week for iron ore. Let's have a look. No, it wasn't that bad. It's only down. Oh, maybe that's next week. Down 4.6%. Yeah, so negative week for iron ore. Down, particularly on Thursday. In fact, it was a pretty bad day on Thursday, down 4%. I would assume that we're seeing a fair bit of weakness in iron ore companies. So let's have a look at some iron ore companies. I do have an iron ore watch list. Let's have a look at BHP. It's starting to drop. It's looking a little bit more bearish. In fact, I'd assume all these companies' charts look fairly similar. They should, maybe not identical. That's Mount Gibson, Fortescue. Well, we haven't seen Fortescue drop as much as what you might assume. That's interesting in itself. Phoenix is pulling back as well. Not as much either. And then we've got some other smaller companies there as well. Okay, so let's go back to my original list, my video technical list here. So iron ore, starting to roll over, looks like. Maybe we need a little bit more stimulus from Chinese government to help iron ore companies in Australia. But the Chinese government wants iron ore to be as low as possible. And that's the problem iron ore companies are going to face over the next decade or so. What about uranium? This is the spot physical uranium. This is a daily chart. I don't mind this. I don't mind this at all. It's like uranium is moving into an uptrend. A good week for uranium, up 2.5%. I don't mind this chart at all. And also, one of the things that helped uranium through the week was news that Amazon are going to use nuclear for the data centers, I believe. I heard that. I'm just going to confirm it. Nuclear. I just heard it. There we go. Amazon signs agreements for innovative nuclear energy. Amazon betting on nuclear power to fuel its AI ambition. So that's interesting in itself. And I have a feeling that might have helped a nuclear during the week. They just saw that story and went, oh, that could be beneficial for nuclear or uranium companies. Oil, down below $70. Here you go. So this is very important. So there was a lot of positive sentiment in oil a few weeks ago because of the Middle East. And I had a look at the chart and went, nah, this is nothing. This is just, it's in a downtrend. This was like a little bounce in the downtrend. I have no interest in oil at this point in time. And since then, it's looking pretty negative for oil at this point in time. In fact, a pretty negative week for oil, down 8.8%. And unfortunately for me, I did put in order for Karoon quite a few weeks ago, and I put it at $1.46, and it stayed above $1.46 for a long time. The reason I put $1.46 was because a really good support level is about $1.42. So I thought I just put in $1.46 just above the support level, and it hit $1.46 on Friday. And then I got a notification through Superhero, oh, you bought some shares in Korea. And I went, oh, goddamn, I forgot about that. I forgot about that trade, that bid I put in, but that's okay, because I think that could be a good price to pay for Karoon because of that support level. What about gas? Natural gas? Oh, down 14% for the week. Natural gas looking quite yucky. Yeah, the chart looks pretty crappy as well. A lot of volatility in natural gas. And lithium up 4.1% on Friday. Go lithium, but no end in sight. So I would say lithium is near the bottom. But I probably said that about 6 months ago when lithium was a little bit higher. So it's falling gradually, very slowly. What about copper? Copper. So we know silver and gold have had a good look good, but is that true for copper? You'd sometimes think that there is a relationship between gold and copper, because a lot of times when a company is mining gold, they also have byproducts or copper byproduct and flipping it. So a lot of times you will see gold companies also mining copper, and a lot of copper companies also mining gold. So there is a relationship between the two in terms of mining, but maybe not so much relationship in the price of both commodities. But the interesting thing about copper is it is at an important level, or just above an important level. That's that dashed line right here. So that is an important level for copper. The other important level is about $4.70. If it gets above that, that will be a bullish move. But at this point in time, we have seen a few negative weeks for copper. So 3 negative weeks in a row for this commodity. Now, what else do we have here? Coal. Come on, coal. No trend at all. I'm waiting for coal to go into an uptrend. It's looking more and more likely it will. I'm going to call it. Eventually, coal will move into an uptrend over the next few weeks, next few months. And then let's have a look at tin. Nothing with tin. Nickel. Nickel's going down. You can't see it here, but it is going down. And finally, palladium up 3.61% on Friday. And it's trying to get back up to, it's right on this resistance level. Right on the resistance level. That is interesting in itself. It failed the last time it tried to get above the resistance level back on the 17th of September. And now maybe it can succeed right now. I do like the look of palladium right here. I do like the look of this. It's tried to get above this level about 4 times in the past. And I think eventually it will succeed. And I do like the very fact that the short-term moving average channel has turned green, which tells me the short-term trend in palladium is starting to turn up. I just need to see it. Need to see it get above the highs we saw back in September. Anyway, that could happen over the next few days or over the next few months. And cocoa, last of all, going sideways. Now onto Bitcoin. Bitcoin is starting to look a little bit better. I needed to see it get above 66,000. It has that, which means we have a new higher high. The last high was a higher high. So this is the third high or second high in a row. We started to see separation of the 2 moving average channels. That's a good sign that this particular asset is moving into an uptrend. You can see there was no gap in the 2 moving average channels. Even when there was a gap back here between March and August, the price of Bitcoin wasn't really going up at that point in time. So this is the potential of a new uptrend developing in Bitcoin. At this point in time, I'd like to say just potential. It doesn't mean it is, but just potential. It is moving to an uptrend. So Bitcoin looks pretty good. Is Ethereum? No. It's getting close. I'd like to see Ethereum get above 2,700. That's the highs Ethereum saw back in late September. But at this point in time, definitely Bitcoin's chart is looking better than Ethereum. Now onto bonds. So bonds have been rising. What's happening there? In fact, bonds had a really big day on Thursday, up 2.1% after a couple of down days. This is looking really interesting. Why are bonds yields rallying? This is unusual because the whole thinking is bond or interest rates will drop, which means bond yields should be falling. But it's not happening. So the bond market is telling us something here. They're telling us that maybe inflation is not under control, or interest rates won't drop, or who knows. But bond yields are rising. And finally, currency, this Aussie dollar, I wanted this to rise. It tried to break out at 69 cents a few weeks ago, and it's dropped back to 67 cents. So unfortunately, it's not rallying. Okay, that's all the indices, commodities, cryptos, and bonds and currencies. Now on to 15 individual companies' charts. I wanted to keep this video under 40 minutes. I don't think it's going to happen unless I keep all these charts to under 1 minute. First one is eRoad. Okay, so I bought some shares at 90 cents for eRoad. And this is important. This is important to me because I kept to my rules when it comes to eRoad. I have a rule, have a price I'm going to sell if it gets to that price. And eRoad looked pretty good. Bought at 90 cents. I thought that was a breakout. Rose all the way up to almost $1.40. And I thought, oh, this chart is looking pretty good. Then we saw a fair bit of weakness after that. A few big down days and nothing. The buyers just didn't come in at all. Share price went all the way down to $1 back on the 10th of September. And the share price went up a little bit, went from $1 to $1.16. And there was a really big down day on the 27th of September, down 8.6. That was my sell point. And I said, if the share price gets below $1, I will sell. I sold before it got below $1. I just saw too much weakness in the share price. and I just thought it's going to fall below $1. This could have been a mistake if $1 was a support level and it remained above $1, but I just saw too much weakness, and the buyers just weren't there. There was no buyers. There was just a little bit too many sellers. There was no conviction from the buyers, and the market was telling me something is wrong with eRoad. And since I sold, the share price has dropped from above $1 to 79 cents. Now the valuation of this company is starting to look interesting. Well, and it's in a support zone as well, sort of above or between about 66 cents and where it is now, I'd say about 80 cents, 88 cents, is a nice little support zone. But why is the market selling, and why are there no buyers for eRoad? So this is looking fairly negative for eRoad right now. Same thing for Jumbo. This is looking really negative as well. So I had a nice little support level. There was a nice little support level at about $13 or just above $13 for Jumbo. The share price of Jumbo hit that support level on the 23rd of August when they released their results, and there was no significant bounce. Share price sort of went sideways. There were small bounces, but no significant bounce. So the market reaction to their results, I can't remember whether I liked them or hated them. I can't remember if I thought the market was wrong, but it's irrelevant whether you think the market is wrong, because overall the sentiment of the market is going to overwhelm you. And this could be one of those instances where the market doesn't like what Jumbo Interactive or how they're performing right now, and they're just selling en masse. And that has led to a fair bit of weakness in the chart and the share price. I thought the share price could remain above $13.20 because that is a nice little support level. So I was closely following the chart on this, but if I saw the share price drop below $13.20, that would be a negative sign. And it did it during the week. In fact, it did it on Wednesday. There was a bad day on Wednesday. Share price dropped 3%, and there was no significant rally. There was a slight rally the next day. Share price went back up to $13.20, tested it. In fact, it went to $13.90, tested it. There was no buying. And then the next day, on Friday, share price dropped another 1.4% and closed at $12.77. Now, this is looking a little bit more weak now. I wouldn't be surprised to see the share price try to test $13.20 again, but something is happening, something negative is happening with Jumbo, and this chart does look fairly weak, particularly now it's broken through a support level. Now, let's look at some positive charts. Well, one positive chart. Well, I do have a few positive charts moving forward. So this is Shaver Shop. Shaver Shop has been trading in this range for a while. In fact, if you look at the weekly chart, Shaver Shop has been going sideways for about 4 years. 4 years. And one of the things I was waiting for is either a breakout above the top of the trading range or a breakdown below the bottom of the trading range. There was a brief break back in June of 2023. Didn't last very long, and then share price popped up. And then on Friday, I think it was Friday. Yeah, on Friday, we had a really significant day. Share price just went bonkers. Not a lot of volume, but the share price went bonkers. Share price rose 3.6%. At one point in the day, share price would have been up about 7%. Not a lot of volume. That's the one concerning thing. There wasn't a lot of volume driving this, but this could be considered a breakout or a potential breakout. Shaver Shop, potential breakout. In fact, I didn't write it down, but I should write this down just to have a look at how the market reacts on a Monday session. Step 1, clothing. Okay, this one is not as positive. However, so I do own shares. I took some profits back in April, May. And I was thinking, maybe I should buy some more shares. They did release 18th of July, no, 17th of July. They did release something on that day, which was positive. Share price rallied 23.3%, but the share price didn't really increase from that. The market's been fairly muted. Share prices have been going sideways. And then on Friday, there was a bit of weakness in the share price. Share price dropped to about 5.6%, and the share price almost reached this support level. That support level is about $1.56. Now, that support level was resistance, then it became support. So initially it was support, then it became resistance, then it became support. And you can see it held firm on the 5th of August. Share price briefly dropped below that support level and then rallied over the next few weeks. And also on Friday, the share price actually did rally when it hit that support level. Very slight rally. In fact, if we look at the 1 minute chart, maybe 1 minute is not enough. So the share price didn't quite get to $1.56, got to $1.57 within the last 10 minutes of trading. And then in that last 10 minutes of trading, the share price actually rallied quite nicely. And there was a little bit of volume coming in towards the end of trading as well. So there is potential here that Step 1 clothing, or there is a potential buy here, just because it is at a nice little support level. The other thing about Step 1 clothing is I think this company has a pretty nice dividend yield. The yield is 3.94%, price earnings ratio 25.8. I thought it might have been a little bit cheaper than that, to be honest. But anyway, so Step 1 clothing at a nice support level, so potential sneaky buy. Perenti, this one is similar to Shaver Shop, I think. No, it's not. It's not. This one is a potential breakout. So we haven't seen, unlike a Shaver Shop, which has been trading in this range for 4 years, this one has been, or did trade in this range for about 6 months. So a bit of a difference there. And it tried to break out a few weeks ago and it failed, and it was a nice little pullback. But I do like the setup of this chart. So we started to see a bit of separation between the moving average channels, which means the share price is moving into an uptrend. We saw the dip, which is a nice little buy the dip situation. And we have seen the last few days, the share price starting to rally up. In fact, pretty good week for Perenti. You have a look at the weekly chart, up 9.2%. The other thing I like about this, no announcements from the company that I can remember, but we did see some good volume coming in, some higher than average volume coming in the last few trading days. So this is a potential breakout for Perenti on the back of no news. But what you could say with this is the market is bullish about the future of this company, and maybe the market is saying, hey, we expect a profit upgrade from Perenti. Remains to be seen if that's going to happen, but that's the way you could trade these sort of setups. The market is now bullish around this company and just trade that bullishness. Perenti, it's looking pretty good. In fact, I like it. I like this chart for Perenti. Now, I'm going to say here, so just because you get a signal like this doesn't mean it's going to be successful. And that's the thing you have to understand. Not all of your decisions are going to be right. But what you're aiming for is at least 50, 60% right decision making. And the other thing you should also understand is if you minimize your losses, and this is really important, you minimize your losses and ride your winners, even if you get 50% of your choices right, you're still going to make a lot of money because just think about it. The maximum loss you could take is 100%. But if you minimize the losses to say 10% and you have significant winners, so some of my biggest winners over the past few years have been 500 to 600%, you're not going to have a maximum loss of 100%. It's impossible. But you can have 500%, 600%, 1,000% if you just ride your winners and don't take profits too soon. So there's that old saying, you don't go broke taking profits, but you don't get rich by taking profits all the time either. Anyway, that's Perenti. Another one. Okay, 29 metals, copper. This is one I'm just waiting for a bit of shift in sentiment and shift in trend. So I use these moving average channels to sort of determine sentiment and the trend. The main thing we're seeing with 29 metals is the shorter term sentiment and trend has been showing signs of turning around. And finally, we have seen the share price get above the longer-term moving average channel, which means if it remains above the longer-term moving average channel, eventually you're going to see the longer-term moving average channel starting to turn up and then finally get green. The other thing I like to see, or the next thing I like to see, is the shorter-term moving average channel get above the longer-term moving average channel. So a lot of things I want to see for 29 metals. The next thing I'd like to see is the share price get above about 55 cents. In fact, I'd like to see get above 60 cents. That will be a good move because the share price did get into that zone back in May. But this is definitely one I'm putting on my radar. This company has seen a lot of problems with their mine in near Mount Isa because of flooding, something they can't control. Maybe that's something they're going to have to deal with more and more. But definitely, if they can get that mine back and running, I'm not sure if they have, there could be some value with 29 metals. The whole reason why the share price has dropped a lot is because of that mine. So before that problems with that mine, share price was about $2. Now it's 48 cents. Not sure if the company's done capital raisings. I'd assume they have. But anyway, this is starting to look a little bit more promising, but I'm not there just yet. Another one that looks promising is Develop Global, starting to go on a bit of a run. So short-term sentiment has definitely turned positive. Even the short-term trend has turned positive. I'm not willing to say the longer-term trend is up as well. Not at that point at this stage. And there is a very important resistance level right there at $2.55. Now, share price on Thursday went to $2.62. And then on Friday's session, share price closed at $2.58. So right on that resistance level. So if you see share price of Develop Global rally even further from here, that will be a good sign that Develop Global is moving into an uptrend. I'm not sure what they mine. I'm pretty sure they're a mining services company. Plus they have mines that they are in production. I have heard some people compare Develop Global to a mini Mineral Resources. Okay, Droneshield. Why do I have Droneshield in this video? And there's one simple reason. Share price has just collapsed over the past 2 weeks. In fact, there was 1, 2, 3, 4, 5, 6, 7, 8 days, down days in a row. And then finally on Friday, there was a little bit of positiveness in Droneshield, up 1.48%. Share price reached low of 99 cents. So share price right or just above $1, which is a natural resistance or support level for a company. In this case, a support level. Now, the share price briefly fell below $1 back in August. That was just briefly. And I think that was just a bit of short-term negative sentiment, drove the share price down below that for a very brief moment. And the share price rallied from about $1 all the way back up to $1.50. Nice 50% return if you're willing to trade that. So could this be a double bottom for Droneshield? And positive sign on Friday. Now, if we see a lot of buying coming in on Monday, that could be very interesting. What you also could look for is similar to what we saw in Satire. Was it last week or the week before? So Satire, share price dropped a fair bit. And then the share price found a support level, didn't find a support level, it moved to a support level, and then the share price went sideways for about 5 trading days. That's a good sign that the sellers had been exhausted, and then the share price just took off. Share price, in fact, went from $1.80 to about $2.50. So we're talking about a nice 25% to 30% rise in share price in a fairly short period of time. That is definitely a trade you do see quite often. So I wouldn't be surprised to see the same thing when it comes to Droneshield. But I'd like to see a little bit more proof about that. But it is at an interesting price right now at $1.03. Now, a company I do own is called Redox. I do like this chart. Been very patient with this one. Bought some shares at $3.01 back in April. So we're talking about 6 months ago. Share price has moved to my sell price, which is at $2.85, a few times since then. One of the things I am, when the share price of a company like Redox moves to my sell price, I'd like to remain a little bit more patient because I just want to see if it remains below that for a little bit of time. Now, some companies I don't remain patient at all. A good example of that is eRoad. And one of the reasons is that company's small. It's not profitable. There's a lot of uncertainty about this company and not a lot of conviction. Now, Redox is definitely a profitable company, and I can definitely see why the market might be bullish about this company for the long term. The share price went sort of sideways for a period of time after I bought, and then over the past month, the share price has moved into an uptrend, and the share price has reached all-time highs the last few trading days. So this is a nice looking chart for Redox. Wagners. This is the one I've been thinking of trading, but probably a lack of liquidity. A few other things I've been a little bit hesitant about buying. Company released a really good announcement on the 24th of July. Share price increased 21% on that day. Share price then went sideways for like 2 months. And I was thinking during that period, why is the market not interested in this company? Because that was a pretty good announcement. And then for some reason, the share price has just taken off the last few weeks. Share price has gone from 90 cents up to $1.20. So we're talking about a 33% increase in share price on back of nothing. And really good volume the last few days. The company has received a price query from the ASX. I'm trying to remember if they did actually answer that or if they were put into a trading hold. Let me just verify that. So that means a price query, it means the share price and the volume have increased on the back of no news. And the ASX is asking the management of Wagners, why is that so? So yeah, response to ASX price query received or sent at 4:32 p.m. on Friday. That's after trading had finished. And I'm going to see if they said anything interesting in this. So for those who don't know, price query, they are asked, first question is, do you have anything that you have not released, any news that you have not released to the market that could explain the share price movement? I'd say 95% of times, maybe even higher than that, the company says no. And that's a good thing to say no, because if you do have information that you have not released to the market, there could be some insider trading. Now, if they answer no to the first question, they don't have to answer two, so not applicable. But in the third question is where you get really interesting responses from companies. So this is where they can be a little bit more creative, because the ASX now is asking them, is there any other explanation that can explain the share price and volume movement in your stock? A lot of times you do see some interesting responses from companies and you do get some insight. In Wagner's case, they've answered simply enough that on the 17th of October, 2024, Wagner's publicly released its annual report, corporate governance statement, and notice of meeting for the 2024 AGM. Now, there should not be any price-sensitive information in those documents. So more than likely, they were not marked price-sensitive, and they were not. So I don't think that really explains why the share price had moved. It could be just one fund manager taking position in the company. I don't know. And would I be trading this at this point in time? I'd say no. Share price has just increased way too much over a very short period of time. And I could see the share price pull back easily enough because of the lack of liquidity. Now on to Andean Silver. Pretty good looking chart, huh? Is there anything to discuss about this? Few interesting things about this one, Andean Silver. So silver market has broken out, looks like, potential breaking out. Share price of Andean Silver on Friday just went absolutely nuts, up 16.4%. Share price of this company broke out back in March at a share price of like 25 cents. Now it's $1.35. The other thing to look at is volume. Look at that volume, increase in volume. Exactly what you want to see. Now, the volume started to increase in February before the share price broke out. It's one thing I'm trying to learn now, is trying to see increases. So if you go back here, if you go to, say, February, you can see a really good increase in volume, but the share price was not responding. And I have now read a few times that volume often precedes price action. That's why I'm interested in volume, trying to get these indicators of an increase in volume and then see if you do see a subsequent increase in share price. We have seen that with Andean. And then the volume has kept on increasing. In fact, the last trading day on the Friday, the share price rose 16%. That was the highest volume day. This chart looks absolutely brilliant. I like this chart. Now, during this period, we have seen the share price pull back a fair bit. So there was a period in July when the share price went from $1.10, maybe, $1.07, all the way back down to 56 cents. That's a pretty big decrease in share price in a fairly short period of time. Lark Distilling. Share price has been a downtrend for a long time. At one point, I did own shares in this company and I sold out a long time ago because share price in a downtrend. I have no idea how low the share price is going to go. And that's what I'm doing more and more now. Listen to the chart. Chart says, or the market is saying, we don't like this company right now. Something's wrong. Share price moved into a downtrend back in 2022. Share price at that point was well above $4. Share price moved all the way down to a low of about 75 cents or 80 cents. But we are seeing some life. We are seeing some life in Lark Distilling. Share price has rallied to $1.17, some really good week, in fact. In fact, if you look at the weekly chart, Lark Distilling had a week where it's up 15.84%. The other thing I like to see here is there was a big spike in volume just before the share price took off. So on the 10th of July, not sure what that was, could be a cross trade, but that spike in volume was enough to signify the low in the share price, because after that, the share price started rallying. Not only that, you see a subtle increase in volume as well. So that's a good sign moving forward for Lark Distilling. Am I willing to trade this right now? No. Now, I do own a company called Pioneer Credit, and this was a question or comment from one of the viewers, and I had a look at the company and went, oh, there is potential that this company is quite cheap. So I bought some shares at 47.5 cents. Share price has been lower than that briefly since then, but then for some reason, during the week, share price increased. And there was also a subsequent increase in volume as well, coinciding with that increase in share price. So that's a good move. When you see a corresponding increase in volume, when the share price pops up, that's a good sign. So the chart still looks pretty good for Pioneer Credit. And a pretty good week, up, what was that? Up 17%. And even the weekly chart's starting to look pretty good as well. But the daily chart looks better. So that's Pioneer Credit. Next company I want to show is BSA, which I was doing a standalone video on during the week. They just released their Appendix 4C, and it looked pretty good. And the chart looks pretty good as well. So I'll go more into depth in this chart when I do that standalone video. Share price reached a long-term high, maybe even an all-time high. So about $1.10. Yeah, it's nice. No issues with this chart. Maybe the only issue could be liquidity. But if the company keeps on succeeding financially, you're going to see the liquidity improve over time. And that's exactly what you want to see for these type of companies. You want to see the liquidity improve over time. A good example of that is Shape Australia. Actually, no, I got a better one. GNP, Genus Plus. I struggled with this one back in 2023 because there was a lack of liquidity. It wasn't that bad, but I did see it. And the liquidity has significantly improved this company in the past year. You can see really good volume coming through, and that corresponds with the share price rising. And the whole reason you're seeing liquidity improve, more buying from institutions, share price in a beautiful uptrend is because of financial performance. Financial performance. And finally, I did a video on a little green Pharma, and I've just gone to include this company again. Really good day when they release their Appendix 4C, and then follow on a really good day on Friday, up another, what was it? Up another 35% on even higher volume. This could be a breakout for little green Pharma. Okay, that's all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. I'm not sure if I will do that bank standalone video just yet because this particular video went a little bit longer than I was anticipated. So I am a little bit strapped for time. So I will do that bank standalone video within the next few days, more than likely Tuesday or Wednesday, and then also do that BSA video as well. Okay, so that's all I have for this video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, just find someone who is good and can look after you, can answer your questions, that sort of thing. That's it for this video. Have a good day. Bye.